So it's crucial to at least have, you know, first, if you want to look at the difference between the folks that are on that national quitters list, that are giving up on their dreams, and those that don't, is not only do you have a goal in mind, and not only do you have a system or a process that you're going to do every day, but do you have a way to keep yourself in the game? So like a routine to rest and recover is going to be just as important as your weekly routine to make money on the charts. If you don't have a routine to, when you get home from work, do a full reset before you get on the charts, to really take care of some of those things that linger in the background, like spending time with family, like doing the obligations, like taking out the trash, like all the stuff that's just kind of lingering in the background. If you don't have a plan for how to keep yourself here in the long term, that's what I would spend time doing this week. And see, okay, on the weekends, most people use that as an opportunity to catch up on a lot of the stuff they've put off, to catch up on sleep, to catch up on spending time with family, to catch up on maybe reading or personal growth or whatever it might be. If you can implement somewhere in your routine for the rest and the recovery and the personal growth, that's how you can stay in the game longer. When some people are burning out, you can always tap back into the purpose of why you're doing this, and you can tap into this protocol, as some people, it's like a scientific term for it. You can tap into a protocol to reset, recover, and get right back in the game. All right, the difference between two folks. So what we're going to do on today's live stream, the Sunday Market Outlook. The purpose of these outlooks is to show you what I go through at the beginning of every week. I've been doing this since 2020. This has been a winning routine for me where I look at the potential trade opportunities that might arise during the week. I look at potential news events that could impact my trades or that might be red flags. And then I also just try to reset my mind and set a good plan for the week. So I have multiple scenarios, multiple opportunities, and I'm not putting all my eggs in one basket. What you don't want to do is not have a plan of action, show up on the charts and just start winging it, which is just show up and see how you feel that day, try to find structure and try to fit into the market action. That's not really the most optimal way to make money. You want to have multiple scenarios built out. If price does this, here's what I'm doing. But if price does this, I have a backup plan. So I'm not here married to a bias that I just, oh, the market has to go a certain way. Instead, I'm able to adapt to whatever the market conditions are providing. Cool? All right, good stuff. So let's go ahead and get started. Let's do the news first, and then we'll also be talking about some key fundamental news events for the week. Because I know that CPI was last week, and I'm already seeing Bloomberg and Goldman Sachs and JP Morgan start to shift their perspective on rate cuts. So here's my predictions is in the January meeting, there's going to be no rate cuts. That I think is already priced into the markets. The big question is, are we going to see the first rate cut in March of this year? Now, because we had a CPI print last week that was a little bit worse than expected, most people are starting to get into this panic mode of just saying there's not going to be any rate cuts in March. March is a long time away. One CPI print is not going to shift the decision of the Fed. And it's very important to understand the incentive of the Fed and why they're going to start cutting rates. They're not cutting rates because we've beat inflation. They're going to cut rates because they feel like, their policies have a delayed reaction. And all the tightening they've done have started to slow the ship, and the ship is still kind of like in this forward momentum. They're expecting, the tightening policies to really filter through the markets and filter through the economy in the next 2-3 months. And I think that we're going to be primed for rate cuts because the economy is stable and inflation is still back down. Now, obviously, I'm not predicting anything. I'm really waiting until the March meeting to have that solid answer. But this could create a consolidating market until then, if the markets aren't sure about rate cuts anymore. We've seen massive bullish momentum in the stock market off the back of the expectation of rate cuts this year. You take those rate cuts away, markets don't have that much to be excited about anymore, which means that we could start to see a consolidation where, maybe the market doesn't break the highs right away until we get some clarity. So that's kind of big picture news that we'll be discussing. And then, of course, who can tell me what tomorrow is? January 15th. Somebody let me know, what is January 15th and why is it significant to the United States and probably to the world economy, not probably, but to the world economy as well. What is January 15th? Everyone says MLK. MLK, well, yes. All right. Shout out to MLK for sure. But it's also the Iowa, it's also the first, exactly, the Iowa caucus. It's the first primary elections for the Republican primaries. And as you guys know, there's really two camps in America today. There's folks that are pro-America, really conservative in terms of the economic policies. And then we have folks that are a lot more interventionist, that are a lot more willing to spend money and print money. And that's going to further make the debt crisis in America worse. So really there's two camps. We either get the border under control, we either get spending under control, we stop intervening in foreign wars and save ourselves all that money and try to start working down this national debt, which is going to be on the backs of our generation. Or we have this other camp, which is all this stuff is happening around the world. We got to play Superman. Let's print as much money as we need to solve these problems. And then whoever has to pay for it later, doesn't matter, we'll be dead. And so there's really these two camps. And this is the election to decide whether America keeps its global dominance. Because 4 or 8 years is enough time for one of our adversarial nations to catch up and take on the global reserve status of the dollar and of the United States' global power. So this election to me is the most important one, and then it's going to be about regulations. What we've seen is during the Trump era, there was a deregulation in business, which allowed a lot of companies to come back to the States, to leave China and some of these other places, and to bring manufacturing back here, to bring innovation back here, and the GDP of this country started to grow. Now, if we have policies that are a little bit more, so like, let's say liberal policies tend to raise taxes on corporations because they're just like, oh, you guys make money, you guys can afford it, give us your money. What typically happens is corporations take their business overseas. And so this regulation versus deregulation environment is crucial to see how active America is going to be. On the other side, we also have this interventionist mindset versus this isolationist mindset. Isolationist meaning let's not keep getting involved in random foreign wars. Interventionist means that, oh, there's something wrong happening over there. We have to go get involved in every single problem. What that means is that we're going to have to print money in order to fund these foreign wars. And that's also going to further exacerbate the stress on US taxpayers. And so this election, very important, not only in terms of just the political implications, but because the American election impacts everybody in the world. And then these policies of interventionism, conservative financial decisions versus deregulation versus firing half of the federal government, as Vivek says he wants to do, national security, supply chains, making NATO and some of these other key parties pay their part. These are going to have rippling effects across the entire world, which is why the election is on the forefront of everyone's, attention right now. Let's take a look at this week and see what we got. Obviously, we just talked about the 15th. That's going to be the Iowa caucus. We have unemployment claims. That's weekly. That happens. Retail sales. Retail sales is very important. This is like a consumer sentiment survey. If retail sales is still coming out active and it's slowly trending higher, it means consumers, people like us, are still spending. We don't spend unless we're confident about our ability to make money in the future. If you just lost your job, you're not out here spending. If you still have a job and you don't think you're going to lose it anytime soon, you'll keep spending the same way as usual. And so retail sales is a big component of our understanding about consumer sentiment and about if the economy is still moving and how people feel about their ability to spend. Unemployment claims, this comes out weekly. Preliminary US consumer sentiment. So consumer sentiment is great. This is preliminary numbers. So this is kind of like an earlier estimate of what this is going to be for, I believe, Q4. The last one was December 8th. This is going to be January 19th. So it seems like this is a monthly print, not a quarterly print. But I think retail sales is the bottom line. This is how much people actually spent. Consumer sentiment is more of like an early indicator of future spending. And then, of course, at the end of the month, we have the Fed meeting, long anticipated, but I think we all know what's going to happen. Jerome Powell is going to reiterate a soft tone. No rate hikes or no rate cuts. I think we see a minor dip during the news and then a full recovery after, once people realize that Jerome Powell still has an intention of kind of being tight on monetary policy. Like inflation is a very big deal for the Fed because I kept explaining this last year. They had two choices: send us into a recession, okay, by trying to fight inflation, or let inflation run wild and see how that one goes. Which problem is worse, a recession or high inflation? Now, most people off the back of your head, you'd probably go recession because that's one of the worst things that we can think of. People losing jobs, people potentially in food lines, people, not spending, and so retailers are laying people off. Not a good environment. But then you start to think about the effects of high inflation or hyperinflation. And then you look at some of the worst examples, like we see Venezuela or my home country of Lebanon. When you have hyperinflation, the currency is worth nothing. That's when you have total economic collapse. That's when you have revolutions, and that's when you have violence and populism. And so, in order to avoid those big catastrophes, Jerome Powell is still willing to send the economy into a recession. So if people got to lose jobs just to bring prices down, I think the Fed is still willing to make that gamble. And then obviously they don't have a solid answer as to if it's going to work or not. But I think they have a better shot right now of continuing to be tight on policy, fight inflation until March, and then in March, don't do a rate cut. Talk about rate cuts so that the market starts getting excited, and then you can do a rate cut in the next meeting potentially. Okay, that's just my humble one guy's opinion to the Fed. Let me know which pairs you guys would like me to cover. On my own, I'm going to do NAS100, Euro USD, Gold, US30, and Bitcoin. I might replace Bitcoin with UJ. So let me know if there's any other pairs that you guys would like me to cover or other instruments, and then we can go through and talk about some more market news at the very end. Okay? So let's go through this. NAS100, very, very straightforward market action on the higher time frames. We got this consolidation zone right here. We have a beautiful expansion to the upside, correction, and then another impulse. Now, the only thing is that we have not broken above the previous highs, so buyers haven't pushed to the new range yet. The reason that's important is because if the market pushes to new highs, then what we can expect next is a pullback inside the range and a continuation. If the market is still creating a lower high, that means bulls have not fully taken control just yet. The market could continue to range here or come down just a little bit lower to this previous area before we continue. So what I like to do is just section off price. We have this low here, and then we have this low right here. I would also like to find the high of my range because I'm just trying to find an accurate playing field that I can focus on. So as opposed to looking at all the market data, I just want to focus on the most important information in front of me. So with every range, we have premiums, which are going to be here at the top. And then we have discounts that are going to be here at the bottom. It's a buy low, sell high situation. So a lot of my VIP members, you guys can see the double top rejection here at the 88.6. My expectation is that we have a pullback. We either get stuck at this level here and just start to range, or we come all the way down to the 88% of these lows. This would be ideal because then we have a beautiful double bottom rejection and we can trade that to the very top of the range. So as for now, there's two buy zones that I'm interested in for the week. And yep, you guys guessed it. We have 15, 9, 10 right here. $16, 310 right here. And then, of course, this beautiful sell zone. Oh. This beautiful sell zone right there at 16,8 or 16,900. So it's this simple. It's going to be sells right here. Let me know, VIP members, what other pairs do you guys want me to cover besides NAS, US30, UJ, EU, and gold? If there's anything else, let me know. We have buys right here. All right, let's take a look at how we would structure these trades. This trade would be structured very straightforward, 20 to 30 points below this low, which would put us at, so that's 193. Go 130, that's about 60 points. 60 points below the low. Higher time frame trade for sure. So when the market comes down here and breaks up, we can go down to the smaller time frames, 30-minute or 1 hour, and then catch a retest entry. That way our stop loss can be below this structure, and we don't have to take as wide of a risk. But this would be the buy from 16,300, and this would be the buys down here at 15,900. The risk and reward on this first trade is 3.5 to 1, and we have 3.5 to 1 on the one on the bottom as well. Okay. Sells do make sense, but you guys know I only want to trade with the direction of the market. So that's why I'm really looking for those buys, but it's very straightforward that we got sells, and then buys, and then buys again. Any questions about NAS100? This is about as easy as it can get. It literally cannot get any more clear. Could we make some kind of smaller time frame reaction right here and just start to range and then the market pops off? Of course. If that happens, then what I'll do is I'll just wait for the next consolidation, wait for the market to reset. Once it resets, wait for the dip inside, and we'll be able to buy off of both of these levels. All right, so if the market does just pop off, you just wait for it to reset, wait for that consolidation, and then look for the next few phases. All right, Bianca said it's good. Max said it's good. Two Steps says it's good. Would I mind taking a look at WTI oil? Sure thing. Shout out to the homie MLK for sure. Big shout out to MLK. And I think we could all learn a lot from MLK, especially today with a lot of the BS that's happening. Okay, awesome stuff. Let's do US30. We can't do any of these without going through the DXY first. I have to keep reminding folks because whenever I'm going through a swing trade idea, I kind of feel like people forget on a weekly basis. And so let me just remind you guys that we've been calling this since last year, since it first hit the 100 zone. Now that we formed the inverted head and shoulders and that has been complete, the next push is going to go to 103.7 or has a very high probability of going to 103.7. Once we break 103.7, you guys can see the magnet indicator here. Price is going to be racing to that magnet indicator. 105.6 is the next zone after, and then 107.5 is the last zone after that. Very straightforward. Give me a few pairs that are likely to drop or go up based on the dollar going bullish. How can we make money off this information? Somebody let me know in the chats. What's a few ways that we can make money off this information? Don't just call out a pair. Say buy, whatever pair or sell this pair. Give me a few ways that we can make money on this information right here. Knowing that the dollar at least has another 2, 3, 4, 5 weeks of bullish momentum. How do we take advantage? All right, Mike says sell EU. My guy. Chris Brown says buy UJ. Yep, sell EU. Two Step got the, yep. All right, it's that simple. You can short something with a USD at the end of it. Or you can buy pairs that have a USD at the front. USD CAD, USD JPY. Okay. Now, I would personally, the reason I pick both of these pairs is because whenever the dollar goes bullish, first off, I'm fundamentally bearish on the yen and the euro because I think European policies are extremely destructive to their currency. And I think even though they've just entered this kind of tightening cycle, at the first sign of trouble, they're going to start raising rates, or they're going to start cutting rates again, and they might start pumping money out even sooner. I think because of that risk, the euro is one of those currencies that I see only having a downward future. As they continue to introduce more, as more countries want dollars as opposed to euros, I think that their currency is going to slowly kind of see that decline. Now, on the other side, the yen, we talk about this way too often, but I'm bearish on the yen, at least for the next 3 to 5 years, because of their central bank policies. So not only do you want to find random pairs that have a dollar in it, but you want to also find a cross where the other pair or the other currency that's in that cross has some kind of central bank policy that's different than the dollar. So yen, very bearish, while the dollar is bullish. The euro, bearish, while the dollar is bullish. And if you have those two things at the same time, that's when you get a fast moving pair like UJ and like Euro USD. So choosing which cross is very important. Don't just pick a random currency because that's what you want to trade, but instead look at the central bank parity or central bank divergence between their policies and say, okay, this policy and this policy are completely different. The dollar, we're now in a cutting cycle, at least from what everybody's expecting. And then you look at some other places in the world that are on a tightening cycle. So they're getting more aggressive. We're getting less aggressive. That's completely different. Money can be made. That's called an edge. Okay. Is BRICS traded in the Forex market? No, not even close. This is why I've always talked about BRICS. And I know that I talk about how the election is very important. But I've also said this since 2021, and I kind of stand by this, is that no one wants to use Chinese monopoly money. The Chinese yuan or the renminbi is not globally accepted. If you told somebody like, I would give you double the money, but it's going to be in renminbi, most countries would say no because they have no way of converting it. Some of these currencies are only used within their own country. And so it's not supposed to be a global, like that's why they have the renminbi, then they have the yuan. One of them is more for like international transaction. The other one is more for their sort of like inside of their country's trade. But all these countries still need dollars at the very end of the day. So the BRICS currency, I don't think is going to go that far. However, I will say it's the same as Bitcoin. Like Bitcoin, I was never stupid enough to think that well, I was for a little bit. I was stupid enough to think that Bitcoin could overtake the US dollar. Now I'm not that stupid. But what Bitcoin can do is provide an off-ramp to the dollar. So if the central banks, or specifically the Fed, abuses their power and manipulates the dollar at everybody else's, to everybody else's detriment, then everybody has an off-ramp and they can have an insurance policy to go to Bitcoin or to go to the BRICS currency. And so I think that that is good to have that level of competition because it holds the central bankers accountable to know that, hey, you can't just do whatever you want. You still have to make it make sense. Otherwise, people are going to choose an off-ramp. And I think that's what we're seeing here. But no one's going to use Chinese monopoly money. Everyone's talking about going through Bitcoin. Okay, so dollar bullish, very straightforward. We got to do US30. US30 has gone through a massive expansion with no pullback yet. God, I love a consolidating market. You guys, if you know my strategy and you know how I trade, I absolutely love a consolidating market. We already hit the 88.6. We're already forming new highs right here. Forget the yuan, but since Saudi joined BRICS and sounds like they're abandoning the petrodollar agreement, what's your thoughts on that? That's a really, really good question. That's honestly a great question. Let me give you guys an example. So I used to be an intern, and then I worked as a legislative assistant on Capitol Hill. I worked for two separate congressmen for a few years, basically just writing legislation for them, giving private tours of the Capitol, going to hearings in these committee rooms, taking notes, and then being able to present those notes in a good way to the legislative staff so they can make a decision. And in my time up there, I learned a very important lesson. When we sit here and ask ourselves, let me give a good example. Why aren't the speed limits just 5 or 10 miles higher on the highway? There's so many people that get pulled over on a daily basis. At no point when you're driving on a 60-mile-an-hour road is everybody going 60. They're going 65 or 70. So the question is, why not just raise the speed limits on these key highways where everybody's going faster? And then somebody broke it down and went through the costs of switching every single sign, and then how much traffic it would cause, and then how much regulation it would have to change, and how many books would have to change, and how many legal codes would have to change just to adopt these new highway signs. Billions and billions of dollars in highway signs. So then you ask yourself, getting off of the petrodollar system is the exact same thing. The largest countries can afford it. They can't afford the slowdown in their business, but they can afford the costs. The smaller countries can't afford either the cost of switching over or the slowdown in their business and sanctions in order to move over to the new currency. Because the US will sanction the shit out of most countries that try to play that game, or some kind of removal of power. So let's take a look. I mean, look, I'm not gonna say too much. I'm not here to really blow the lid on this thing, but just take a look at every country that's tried to switch from the petrodollar system to selling oil in their local currency, right? Running as far back as the Shah of Iran and Jimmy Carter. Shah of Iran was gaining way too much power and influence, wanted to sell Iranian oil in their local currency because they were the ones producing it. Then he got ousted. Saddam Hussein made the same exact promise. We didn't go in there for WMDs, and we certainly didn't go in there because he was a bad guy. We went in there because he was feeling himself too much, made a bunch of promises about how he was going to decouple the petrodollar system and start selling Iraqi oil in their local currency, and that brought down his regime. You look at Gaddafi, same thing. You look at not El-Sisi, what's his name? From Egypt, same thing. You look at Venezuela, same thing. Okay, so there's a theme here. The small countries can't do it. They're the ones that China and all these guys are trying to recruit. Saudi Arabia cannot afford it because as of now, they still rely on the global dollar or the global trade. When you sell oil to the world, that's good, but there has to be something after. Saudi and the UAE, what they did is they're selling oil futures, and they're selling basically promissory notes on the oil they have right now. They're pumping it out, and they're saying, I'll sell you my oil 10 years in advance, taking the cash on delivery, and then going to invest it in the future of technology and innovation. If they want to stop accepting US dollars or they want to decouple from the petrodollar system, we cut them off from the global financial markets. Now, they have enough money and influence to be able to get around, but the US is so well intertwined around the world that we could cause an economic collapse in almost any country overnight. If you guys don't believe me, the reason I'm a big fan of Trump is because if you're trying to do or put a country in their place, quote unquote, because they're posing a direct threat to you, you can either go direct military action or you can go economic sanctions like Trump did. When Turkey was intervening in the Armenian issue, I think it was, I can't even fully remember the details at this point, but Turkey made a promise that we're not going to bomb anybody in their retreat and we're going to leave them alone. And then Trump basically tells Turkey, he's like, if you guys lay a finger on any of those troops because the troops were American allies, if I'm not mistaken. They're like, if you guys lay a hand on any of those troops, we're going to have a massive problem. Turkey didn't heed that warning, and the next day we crashed the Turkish lira in a day by imposing sanctions on their 3 key exports. So that, I think, is the game that nobody's paying attention to, is how powerful the dollar America really is, and then how, this is going to sound really fucked up, people are going to hate me for this one, but how benevolent America is. Because America really could be stepping on everybody's neck. And the reason that global dominance is such an important topic is because don't think that whoever comes next is going to have that same mentality. America could have a gun pointed at anybody at any time and then making everybody pay up at any given moment. And I'm pretty sure the next world superpower will be playing that game. So long story short, America's way too intertwined in the world. The dollar is way too widespread. It would cost small developing countries way too much to shift over. These BRICS countries are only strong together, but as soon as their dream starts to fall apart, they start to disband quick. And then you're just left with three of you're left with North Korea, Iran, and China trying to just do this thing together. So that's why this election is very important. We'll see. Okay. But don't we pay the sanctions? No, we charge sanctions. If we sanction Turkey and say that you're no longer allowed to export to these 5 countries and all of our what is it called? Allies are no longer allowed to do business with Turkey. Your key export, which is the literally the backbone of your currency, that's what gives your currency value. If you're not able to trade that, what do you have? So economic sanctions to me are the future of warfare, and it's a lot better because innocent citizens should not be dying because somebody wants to kind of play like a monopoly game, And then so that's why I think that economic sanctions are a great way to incentivize proper action. But at the end of the day, I'm not a geopolitical expert. I'm just a guy on a screen, and so take that with a grain of salt. Let's go through US30 and we'll wrap this thing up. We'll do gold, Bitcoin, and then we'll finish this thing off. Okay. Boom, boom, boom. Let's take a look here. So we're in this kind of like half range. If you guys can see, whenever you're in a consolidation range, you can always draw a neutrality zone right in the middle. The reason it's neutral is because it doesn't belong to buyers or sellers. If you think about support and resistance or supply and demand, this support level very clearly belongs to buyers because every time the market gets here, buyers step in. Okay, and buyers would not keep stepping in if there wasn't a lot of demand or buying interest here. Same thing with the top. This is a selling zone. This belongs to sellers because every time the market gets here, sellers step in. The neutrality zone is right in the middle. It's typically right at the 50%. And you can see that sometimes it's selling, sometimes it does neither. Sometimes it's selling, sometimes it's buying, sometimes it's buying, sometimes it's selling, but there's massive wicks on both sides. So for me, trading in the middle of the range, trading in the average range here is the riskiest, and this is where most money is lost, and this is where the most volume is. Trading on the extremes, nobody wants to do, but this is where all the money is. So we talk about this in the class, and the NAS100 masterclass, folks. You guys understand the box model and the looking for discounts and premiums. So we have a micro box here sitting on the top half of the range. So we have top half, then we have bottom half. Top half, we have a new support and a new resistance. I don't trade the middle. So what I would like to see is either a push down into the discount area or a retest up into the resistance. So we can either short up here or we can buy down here. So I think 37,350, right? This could be a good zone. We might wick all the way through and then close back above. But 37,350 or 37,370 here, this 88 zone, that would be perfect to look for longs. And then if you're looking to just scalp inside of this range, you can look for shorts at the 37,750 zone. 37,750. Life is so simple when you trade like that. Buy low, sell high. You feel me? Linda says economic hitman. Are you talking about me? Is that my new nickname? That's crazy. Says, no, talk that talk. Jamil, the real ones are paying attention. Said Trump 2024, baby. Let's go. Yeah. Dope. Thanks for the breakdown. Trump 2024. It's a very strong support for sure, but don't you think that resting liquidity will get swept for higher high, given that we're at all-time highs? That's a possibility, but here's what I want to tell you. When you're in a consolidation range, the most traders are losing money because, I really promised I was going to turn over a new leaf and I was only going to lead with positivity, but I can't help it. Baby pips traders are looking for a reversal after a long expansion with no retest. Now, what I want to urge from everybody to do is do not look for a shift in market momentum until it happens. Trade what you see and not what you want to see. What I see is that even though We haven't had a solid retest in a while, and we are long overdue. I do agree with the opinion. Factually, we're still creating higher highs and higher lows. So if we look at this floor here, then we go up, we have a high, we have a higher floor, we have a higher high, we have a higher floor, and now we have equal highs. That's why we're in a consolidating market, but the shift happens when we start creating lower highs and then when we start breaking these lows. So once we have lower low, okay, retracement, now we have a lower high and a lower low, then we can start to entertain this retracement. Until then, what I would like to see is that the market respects this consolidation range. I would like to see the market come back down as close to this area of support as possible. As close as possible. I know I have the 37,750. I'd like to see a wick through and a closure back above. That'd be my ideal situation. Could we sweep liquidity and then come back above? Of course we can. Right? But that's not as likely for me as a higher low and then just continuing with the trend. So trade with the trend until it ends. The trend is your friend until it ends. Got it? All right, let's go through gold. And obviously, guys, we're going to go through this throughout the week. So don't be like, oh, I missed the trade or whatever the number was or whatever. We'll go through these throughout the week. This gold trade was something I called a few weeks ago. I can't show the super secret indicators. This is very straightforward. It was a drop straight through the zone. So we closed below all this area of support, massive closure below. And then we had a retracement back up. It hit the 88%, but 78 was my ideal entry price, not for me personally. I don't trade gold. I did analyze this for the squad. And then we had a push all the way down to the previous low, which is the 0 point. Then we had the negative 27 extension get hit right here. And then price almost made it down to the negative 618 extension, the 2008 price level. But we basically hit 2013. Horrible year for music. 2008 to 2011, great year for music. That's the Lil Wayne era, in case you guys don't know. That would have been my ideal target here. But now we've retraced all the way back up and hit the 88% zone one more time. What this shows me is that we had a massive shift in momentum. What is a shift in momentum? It means how many candles do we have in the bearish direction first? Kind of going into here. If we were to count this out, this is on the 4 hour. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Keep going. Let's call this about 40 candles. In the span of just 4 or 5 bullish candles right here, we've already engulfed or broken above this whole area, showing that buying momentum is more aggressive than this current selling momentum. Selling momentum over 50 candles only went from here to here. And then buying momentum in just 4 or 5 candles went from down here all the way to up here. So buyers are kind of coming in with more volume. And then we've had a closure of the body of the candles above this whole area. So now what I would be looking for is a pullback and continuation. Because once you have a break above the highs, once you've established that new range, so just to kind of explain to you guys how a shift in market direction looks, you'll have a break, and then typically what you'll want to see is a higher floor for the confirmation. Sometimes you'll have a break, and then the market will continue to the downside. So this is the last confirmation, is a higher low. And I see a beautiful inverted head and shoulders right here. That could make sense. Okay. Now, because I'm bullish on the dollar, this thing might have more downside. So I'm not a gold trader. I'm going to be personally waiting for the next move. Right now, the sell is already done. I just want to wait for this recovery. We're either going to continue playing here for resistance, in which case we have another sell, or the market comes down to create this left shoulder, and we're able to buy from this 2030 level. This is going to be one where we have to wait another 2-3 days. So just let this one play out, and then we'll come back to this on the smaller time frames. I'll have Bryce or one of the gold traders on the team cover it on the market outlooks. Okay, I want to see a retest of 1.107, but I also want to date Halle Berry. So the market doesn't really care what I want. Ideally, let me kind of rephrase this. Ideally, we push up to 1.107. But what's likely to happen is just the market respects this head and shoulders that's been forming here. And then we see a push to the downside. Why? Because if the dollar is bullish, Euro USD is bearish. So that's simple. Dollar bullish, Euro USD bearish. So I'm actually thinking the market may just drop from here. So let's see what the risk and reward would be if we entered down here. This is just not my kind of game. 200 pips stop loss. Yeah. 2.31 R&R to the previous lows. It's an ugly one. What I would want is a pullback up here and then a drop. And if you guys can just see the difference, it goes from 2.3 to 1. To almost 5.5 to 1. Okay, because the take profit is still the exact same. Risk, I would raise the stop loss just a little bit if I did take this deeper entry, just to make sure I accounted for any wicks, spreads, or any other broker fees. But that would be ideal, is just that retest of 1.107. No guarantees there. Okay, last but not least, let's talk about Bitcoin. So Bitcoin ETF was approved, and then some exchanges or some brokers approved it. The SEC had a false flag. And then certain clients called Vanguard and BlackRock and some of the other houses, and then they tried to buy Bitcoin themselves. And they said, nope, you guys can't buy this ETF. It's against our policies for now. So I think that having these ETFs listed is one thing, and then allowing their clients to invest in these funds is a completely different game. And that's what I think we're trying to get at. ICT traders. I don't trade that either. And of course, I don't trade ICT, but I have been learning a bit more about it. There's just so many successful ICT students. Guys, don't ever think that you're so good that you don't got to keep learning. You don't want to distract yourself. But that's why, like, look, if you can't look at information that contradicts what you believe and then not, make a new understanding of the world using this new information, you're being ignorant. A lot of people will be like, well, my strategy works. And if I look at other people's stuff, it's going to start to distract me or talk me out of my trade or whatever. You got to be mentally stronger than that. Learning is one of the most important parts of being a trader for the long term, right? So I study successful traders as often as I can. I want to look at successful strategies to see how I can improve my game. I haven't bought courses, but what I would do is, like, if somebody posts a markup and they took a great trade, I'll study and see what are the ICT folks looking at. And I realized ICT people, they're looking at something very similar to what I'm looking at, which is, it's supply and demand, but with a lot more detail. And I think that that's where most traders start to lose. It's like, take a martial art or something. If you told somebody the very end game of the martial art and started explaining all these complicated things, they're not going to be able to do any of that shit or understand it. But after 10 years in the game, it's not just throw punches. Now it's, feint, throw punches, duck, and then have a combination follow-up, be able to use your weight and leverage and shift your weight. There's levels to understanding the game. What I do is I've understood a complicated version of how these markets work, especially NAS100. And then I've been able to simplify it down into a do this, and here's my 5 rules, and here's my 10 rules kind of system. And while I respect the smart money concepts folks, what I have to say is that, like, new traders, you got to keep the learning side and the education as simple as possible so the execution gets easier. If the strategy is complicated, when it comes time for you to do it, you're going to fuck it up. If the education is simple, then you're going to be able to execute effectively, and that's just straight up. So I have been learning more, but it's basically supply and demand with massive detail, and then also this concept of fair value gaps, where, like, there's this big ass candle here and we haven't retested this gap, And so that's an area where the market could retest. Like I love adding that little bit of detail. But every time I try to watch those videos, my head starts to hurt. I'm just like, bro, why are we doing this, man? Why you just make up 5 random words that don't mean nothing? What are we doing? All right. Yeah, so Bitcoin ETF, buy the rumor, sell the news. Exactly. This was the spike, $50 or $49,000. This is where all the hype went to when everybody thought the ETF was going to be the next big change. And then we had a massive sell-off. Why? If you're an institutional investor or trader and you're sitting on a bunch of Bitcoin, and this thing just pumped up from 40,000 to 50,000, that's an insane twist. That's like what, 10, 15%? Let me make sure just so I don't get flagged for this later. 22%. Your $1 billion, you just made, if you had $1 billion in Bitcoin like Michael Saylor, you just made 200 mil in profits on every billion that you have. And he has many billions. So that's 200 million, 200 million, 200 million, 200 million. If you're sitting on $1,000 of Bitcoin, you just made an extra 2 grand in a week. So a lot of those folks who are sitting on big money start to take profits and sell off, which is why we saw this selling motion come right after the news. Now, we're still technically creating higher lows, and so I'm not going to sit here and pretend like this is the turnaround, but I personally have been studying the market and seeing these expansionary moves. And then here's the best example I can point you guys to. When you have this massive kind of push, okay, then you have this dry period. You'll have a recovery that comes up about 60% of the way. And then the market will come down for one more go to the lows before we continue. I want to see something very similar. We've already had this beautiful recovery. I want to see one more touch of the lows before we continue. But again, what I want and then what we're seeing here are completely different. As of right now, the market is still creating higher floors and higher ceilings. So until that changes, I just see more upside for Bitcoin. Once this thing breaks down, then we have very obvious levels, 30,000, 25,000, and 18,000, where I will personally be buying in my personal portfolio. And then this is where I'll be not encouraging anybody because it's not financial advice, but I will be writing articles explaining why this is the best time to get in. And then obviously you guys can make your own decisions there. Buy the rumor, sell the news. I've never seen a better example than this. This was just textbook example. Looks like they haven't gotten, what they wanted in a while. And this was just right where they had manipulated this perfectly. Okay. Any questions on NAS100? Any questions on gold, US30, Euro USD? We good to go? This is a hypothetical question, but I see Bitcoin coming down to around 30,000-ish before buying up. Any thoughts? So the way that I look at investments versus trading, I look at trading the same way because I use a scaling strategy to enter my trades. But when it comes to investing, here's what you got to think about. DCA, this is the concept of dollar cost averaging. So I always tell people, don't try to play God. Playing God means, okay, I'm going to guess the very bottom of the market, and I'm going to get it right. Dollar cost averaging says that if you have $1,000, you would not put the full $1,000 into Bitcoin right now, because if the market drops from 40,000 down to 20, your money gets cut in half. Okay, you open up your Coinbase or whatever you're using, and you see $500 as opposed to 1,000. Now, if you wait, let's say that you put $200 in now, okay, and then the market drops. It goes down to 30,000, and you put $500, or actually you put $300, sorry. And then the market drops down from 30,000 down to 20,000. Then you can put the other $500. How does this look? Okay, you put $500 at 20K. You put $300 at 30K. And then you put $200 at 40K. When the market goes back to where it just was, to $50,000, how much money would you make? This is 50,000 Bitcoin price. How much money would you make on each of these? So the 40K to 50K, that's 22%. So it would be 200 times 1.22, which is 244. The 30K to 50K, we would go just 40%. We go 30, which would be 420. And then the 20K to 50K would be almost double. So it'd be about 600 bucks if I'm not mistaken, but let's just make sure. 20 to 50. 60%. It'd be about 700 bucks almost. That was a rough estimate. Don't check me on that one. Actually, check me on that one. Let me know what the real answer is. So 244 plus 420 would be about 664. 664 plus 700 is 1364. Okay. So instead of sitting in drawdown, losing half your money, and then going all the way from $1,000 to, let's say, 1,050, you could dollar cost average, and then your lower positions would be making you a lot more money. So that 300 bucks you put in at the bottom is going to be about $700. That 300 bucks you put in the middle, that could be about 420. Now, let's add a zero to these, and then it becomes fun. So if you add a zero to this, a zero to this, a zero to this, your $3,000 becomes 4,200. Your this $3,000 down here, or sorry, this is $500, excuse me. I messed up this math so bad. My bad, guys. This is supposed to be 500. I couldn't even read my own writing. If this is 500, we're looking at a more than like a 2.5x growth. That'll be about 1,000. That'll be about $1,200 alone. Yeah, I knew that there was something off about these numbers. 16, 18, 64. That'd be 1864. All right. Long story short, you put all your money in, you're risking a big amount of drawdown, and you don't get as much of a return. If you dollar cost average and you put the bigger positions at the bottom, those positions, you'll turn that $500 to 1,200 bucks, and so on and so forth. So dollar cost averaging, big deal. That's how you keep some money on the sidelines and have ammo, but also take advantage of the moves to make sure that you don't miss any opportunities. Okay? Don't try to guess the markets. And most important thing, this is what I used to tell my clients over at Merrill Lynch, which is it's not about timing the markets. It's about time in the markets. Compound interest rewards the people who are in the longest, not the ones who are perfectly timing the lows and the highs. So if you guys are trying to be market timers and you keep selling out and buying in at the wrong time with Bitcoin, promise me something this year, which is that you're going to dollar cost average instead of trying to guess the bottoms and tops. You're going to stay invested instead of trying to switch, trying to trade in and out and be a trader for these investments. And then if you guys can do that until mid-2025, come back and find me and let me know how it went. Because I guarantee that you're going to have a life-changing year if you're responsible that way, as opposed to trying to be a market timer. Okay? Great seeing all of you guys. This has been an awesome Sunday Market Outlook. Looking forward to streaming all week. I'm still doing research on the next firms to go. But if you guys have any firms that you would like to recommend, let me know. I'll be doing those challenges live. And right now, I'm just trying to find the off-ramp. I'm thinking about a regulated broker like Oanda for Forex. I'll eat the fees. This is going to be my 5-year long-term track record account. But on the other side, for my high-risk, high-leverage account, I'm looking for either a futures prop firm or I'm looking for a futures broker to continue trading NAS100. Or at this point, just freaking move to Dubai, get a Dubai citizenship, and then just stay there until the FX summit. I don't know. The next February or the next masterclass to learn the NAS100 trading strategy is February 4th. Make sure to grab your tickets in the description below. This week, here's what we're going to do. Oh, this is going to be awesome. All right, what we'll do is we're going to catch trades this week. Whatever the risk and reward is, that'll be the percentage discount that we give that day. I'll explain. This trade hits at 3.55. We're going to do a 35% off code for the class. This is going to be a reward, and it's also going to be an incentive to catch the best trades, to really let these things play out, maximize the R&R, and then also be able to have that extra benefit in the back end. If you haven't already grabbed your seat, make sure to do so. We'll catch you guys later this week for the live trading streams. I'm your host, Roy Dunia. Take it easy. Peace. Awesome stuff. Yeah, folks had some really good questions tonight.